If you trade penny stocks, small caps, altcoins, meme coins, any of those that give you an environment where you're just saying, I love volatility, I want to show you something for you to consider that I believe is a much better pathway for you to go for several different reasons. But at the end of the day, my job is just to show you how this trades, how the volatility looks, and then it'll be up to you to decide if it fits into what you're looking for. So if you are somebody that says, yes, I love volatility, then this is certainly going to be something that you're going to want to consider. Now, the other component about this comes in the form of right here, it has 0 pattern day trading rule. Now, if you're in the cryptocurrency space, you don't care because there's no pattern day trading rule anyway. But if you're in the stock space, the option space, yeah, you have to deal with that pesky pattern day trading rule where if you don't have $25,000, then you're not allowed to trade as much as you want. A lot of people, they have jobs. But with this, I'm going to show you is open almost 24 hours a day, 7 days a week. So there's a lot of flexibility from a schedule perspective. And then also for those of you that like to short, like to make money when prices go down, this offers a very hassle-free way to go about it. Think about small cap stocks. You got to go locate shares. You've got to pay locate fees. You got to jump through all these hoops just to get shares to short, if you can even find them, and all that goes away. And remember, this is all going to be occurring in a volatile environment. And then the final thing, which I think is the most important, is that it's really risk idiot proof. Meaning, you know what? You're going to be protected because you're going to have a way, in the way that it's structured, that when you have those idiot moments, and let's face it, when you're in volatile environments, sometimes it's not even an idiot moment, but things just go crazy because it's a volatile environment. You're going to have protection against that, as I will show you. And what I recommend is futures trading through a prop firm, and I'm going to explain all of this to you. So first off, the futures market, there's no pattern day trading rule. You can short whenever you want, and there's no hassle with having to locate shares or anything like that. Because it's a futures market, it's open basically around the clock. And with a prop firm, you're going to be able to protect yourself against those very volatile moments or those moments where you're just an idiot and you do something really stupid. So the way the prop firm works, and the one I'm using here is Take Profit Trader, and they were kind enough to actually donate an account for the sake of this video because, again, it's a volatile environment. So I wasn't exactly looking to lose my own money by just putting this on as an example, but they said, here, take the account and you can use it to show people and let them decide. So a special thanks to Take Profit Trader. It's who I use as a prop firm who I recommend. But the way it works is this. So if you have no idea what a prop firm is, that is okay. Just go to their site. I'll put a link down below. But pretty much you get an account and then you have to prove yourself as a trader, and then you have a whole lot of upside potential. But what I want to look at here and show you is this right here. So the volatility that you're going to see, and again, I'll let you be the judge if you think it's volatile enough, but the cost to get this sort of volatility is $75. So I just want you to keep that in mind. If you have a smaller account, you don't have a lot of capital to work with, all you would need is $75, which does give you $25,000 worth of purchasing power. But if you're not familiar with the futures market, okay, that doesn't mean, okay, well, what does 25,000 even mean? What sort of volatility does that look like? And the next component here is that within this account, you can buy up to 3 contracts. Again, I realize maybe this doesn't mean anything. Okay, well, what does that have to do with volatility? So just keep in mind, the 3 contracts is what $75 could get you. And also, if something goes crazy because it's volatile or you do something stupid and you lose $1,500, sure, you will lose the account. They will take the account away from you. But the question is, do you actually lose $1,500 out of your pocket? You don't. You would lose what? Well, you would lose the cost of the account, which was only $75. And my argument is, especially in these volatile environments, is if you're out there trading these volatile environments with your own money, yeah, it's volatile. Things are going to happen. Prices are going to spike. You're going to do stupid stuff. You're going to go on tilt. And you could very realistically be looking at a loss of $1,500 where it is your own funds. It's your capital. That money has literally come out of your account. But not so with this prop firm because, again, the only amount would be $75. So that is the structure of what I think would be very, very beneficial to you as somebody that loves volatility. But also, to be fair and objective, I don't know what your definition of volatility looks like. That is why I want to show you what you could expect. And before I get into it, just understand that the time that I did this was afternoon trading, and I'm not going to say the slowest environment, but a relatively slow environment compared to what it could be. And I wanted to err on the side of caution because I want you to know that what you see here uh, is, like I said, on the quote unquote slower side of things. So let's see what sort of volatility the futures market can provide. Again, I'm just doing this. They donated a $25,000 account because that's what I do. I want to do the bare minimum. What could $75 get you in terms of volatility? So let's take a look. Now, before we get into it, the number you're going to want to watch is right down here. That is the P&L, the open P&L, I should say, and just watch how that fluctuates. So that'll be the key number that you're going to want to watch. This is just all candlestick charts. If you're familiar with technical charts, candlesticks, that's what this is. So futures are just like anything else. So from a technical standpoint. And then the other thing to note right now is I want to give a variety. So we are starting up here with one contract. Remember what I just showed you, the $25,000 account, you could get up to 3 of these, but let's just start with one so you can see how volatile one could be. And again, you look down here at the time and you can see we're talking just in the dead of afternoon. So, this is the dead of afternoon, not known for being the most volatile of times, but that is the context, one contract in the dead of afternoon. So let's see how things start to play out. Again, watch that number right there. So I have not bought, but I'm looking to buy. That's what that green line there represents. So I'm looking to buy just one contract. So let's see how this plays out. So I am in, and then just start to watch that number. And I'm not here to tell you if that is volatile or not. I'm here to let you just be the judge of that. But that's one contract. This is in the dead of afternoon. And let's just, again, watch those numbers. And I should note that these are just trades that I was putting on just to put on. So I don't look at these and be like, okay, what was the logic behind the trade? No logic again. This account was donated to me very graciously through this prop firm, Take Profit Trader, for the sake of this. I just want you to look at those numbers and, ask yourself, wow, does that seem to be moving pretty quick? And again, this is only one contract. And I say that because if you're saying, no, that's a little too slow, okay, you can fix that. How can you fix that? All you got to do is add more contracts. You could buy more contracts, which I'll get to here in a little bit, and you'll see just how much more volatile it can get. But this is just one contract. And as I've spoken, hopefully you've been continuing to watch that number down there and get an idea for how the numbers do fluctuate. But right there, just kind of waiting and, bouncing around a little bit. But that is giving you an idea of what sort of movement you could get. So now let's move to another trade because I want to, I think I've given you enough data for you to be able to check things out. But actually, okay, there we go. So right there, boom, just like that, that further move down put me at $240. Now, next thing we're going to do is now I've just entered. So it happened really quick, but I've now bought 3 contracts. So now this number here, it's going to be even spicier. It's going to be even more volatile. Now, if you look and say, whoa, that's actually too volatile. Okay, you could tone it down again. You could go to 2 contracts. You could go to 1 contract. And there's even other ways in futures that you could tone down the volatility too. But like I said, I just want to show you what's possible at the, at the certain levels with the max size with 3 contracts. Now, if you were to purchase a bigger account, you could do even more than 3. But like I said, I just want to do the bare minimum. So let's now watch again how 3 contracts works. So keep an eye on that number right there. So I'm in for 3, and this is, like I said, the slower part of the day. And you're going to get an idea of how things move with 3 contracts. So the price is going down, which is bad because I want to see the price go up right now. And again, I just want to reiterate, this is a time of day where things are, and look at that. See how quickly that escalated? See how quickly that escalated? And this, again, is a time of day where it's like, it's the dead of afternoon. It's literally 2 o'clock. Or, excuse me, right about 2:30, give or take a little bit. And you're seeing how these numbers are, if you continue to watch. So right there, I took another loss. So right there, down 900. Again, no logic, but just showing you. And as a reminder, volatile things are great. The gains can increase very much so, but they can also, if you're not focused on risk, they can go against you quite a bit. So let's take a look at another trade. So if you like the price action you saw there and you're thinking it's worth at least dabbling in a little bit, And worst case scenario, let's say you're terrible. Worst case scenario, it just goes a volatile beast against you. Again, what would your risk be? And then like the worst case scenario, $75. So even if a price spikes and it's like, whoa, that was that was a $2,200 loss. Well, it only costs you that $75. And the other final thing is it's open to pretty much people around the world. Now, if you see your country on this list, unfortunately for you, this would not be a pathway that you could use. But if your country is not on that list, then they are open to you. And this is a way that I think makes a whole lot more sense to get into that volatile environment that is the futures market. So penny stock traders, meme coin traders, small cap traders, there's just so many benefits. No pattern day trading rule, hassle-free shorting, markets open pretty much around the clock. And then based on the prop firm model, you're protected against both volatility in and of itself, and you're protected against you having those idiotic moments because your risk is only the cost that required for you to purchase the account. So use the link down below. That will give you the current deal. They're always changing promotions. But as long as you use the link, and I'll put the link down below, or you can just go to it right there on the screen. Then this will take you and make sure that you get the best promotion possible. But yes, seriously consider trading futures through a prop firm, and the prop firm of my using and who I recommend is Take Profit Trader. And thank you again to Take Profit Trader for donating that account so I could illustrate just how the futures market fluctuates and what it looks like, and to think that that's what it looks like in a quote unquote slower part of the day. So the ball is now in your court. Is up to you. If you think this looks like something that would be of interest, if this is something that is a sort of volatility you're looking for, then have at it. If there are any other questions or anything like that, please leave those down below in the comment section, and I will be sure to get to them. And definitely make sure to check out Take Profit Trader. Use that link so you can get the best deal possible. Thanks for watching. And like I said, let me know if you have any questions.